Good evening, everyone. This is the 26th edition of the Node Operator Community Call. As always, we have an action-packed agenda for you guys. We have the awesome Sasha starting with the updates from the validator set, Lido validator set this week. We have Alon Murdoch joining us to talk about the latest SSVLM, the SSV staking module that they proposed on the research forums, I think today. We have Jaydeep and Ilion joining us from LaunchNode and Give Directly, talking about impact staking afterwards. But first, let me hand over the screen to Sasha. Sasha, take it away, please.
Yes. Hey, everybody, and welcome to my regular news section. Let's start right away and look back on what was new in the Lido Operator community in February. So I'm trying to change the slide. Yes, it works. All right, so here first of all, yeah, it's about Pectra, and I'll not talk about the situation with Pectra and everything that is going around it. So Sven kindly agreed to cover this part instead of me. Thank you, Sven. And yeah, what I want to cover here is like Lido protocol specific and plans. So Lido contributors published a blog post that outlines like Lido roadmaps to Pectra, which basically answers the question like, what is Lido going to do about Pectra? Since the scope of Pectra contains both the changes in the current Ethereum functionality and new features, it is proposed that Lido protocol will adapt to these changes like gradually, starting from implementing some immediate changes to ensure that Lido protocols remain operational after Pectra. So the changes are the following: upgrading the Oracle consensus and redeploying the CS verifier contract, and removing the initial slashing penalty reporting, since it is reduced significantly and there is no more need to keep it as a separate penalty in CSM specifically. I'm talking about CSM here. So, and additionally, it's about preparing the fallback plans in case something goes wrong. So where one of safety measure can be the temporary pausing the deposits, like in some disaster scenarios. And also to ensure that the upgrade goes smoothly, there will be 2 sequential on-chain votes. So the extended description about all of this can be found on the Lido blog and Lido Research Forum. And on Lido Research Forum, there is a more like a technical explanation of all this stuff and what we expect to see. Moving next to CSM, my favorite topic, of course, and it has been a month since CSM became permissionless, and here is how it is going so far. So permissionless stake share of the Lido protocol has increased from 0.65% to 1.42%, and there was more than 2,300 validators deposited. And like, even though the situation with deposits has been quite tough, we did see significant progress in the queue in February. We've got more than 50 new operators, and the 4th like rewards distribution of CSM node operator rewards has been finalized and distributed. And since I just mentioned CSM rewards distribution, I want to continue this topic and introduce the new blog on CSM UI that shows detailed information about rewards received in the last rewards distribution, as well as, oh no, wait, yes, no, wait, yes, as well as the expected date for the next distribution. And additional thing is like the next feature that I'm very proud about and that I like a lot is the deposit queue visualization, where basically node operators can see the overall situation with the queue, how the queue is filled against the stake share limit, where the queued keys are placed, and to even see before uploading the keys where your keys will be placed, just to see basically what to expect from this deposit queue. So the stuff that is showed here, this is actually also about CSM, of course, and this is about the cool integration that Miga Labs team introduced recently, which is an integration of E-Series CSM that provides both like aggregated and detailed information about CSM operator performance, the number of block proposed, the validator status, and the attestation participation and correctness rate. So as you can see here, the interface makes it super easy to compare the like metrics with the overall network and with like CSM module. So basically here you can see your metric, here you can see the aggregated metric for CSM and the overall metric for the network. We are seeing more and more CSM operators using this tool, and just for those who haven't tried it yet, I highly recommend just to check it out. It's super cool. Excuse me. So next up, Lido community staking tribes. And here I'm happy to introduce the second participant of this initiative, Chainstack. They are Web3 infrastructure providers. And yeah, they are onboarding contributors to Ethereum validation using CSM, and I think that in coming months we'll see more participants joining this initiative. And for those who are interested, do not hesitate to reach out to our community lifeguards. I'm sure you know them, Sam and Isaac, and yeah, and explore an opportunity for your organization to get on board. And I think that from my slide, this is the last one. Yeah, so last thing I want to mention today is that the Venom report for Q4 2024 has been published. It now contains the a super high level and aggregated data about CSM, and I expect to see a breakdown for this information in the next report. Because I know something. And as you can guess, the main metric for that got a significant increase over the last quarter was the number of node operators using the Lido protocol, because Q4 was the legendary quarter when CSM was launched on mainnet. And apart from this, in terms of the other metrics for like client distribution, it is more or less like the same or like comparable with the previous report and the previous quarter. And let me check. Yes, this was the last slide from my side. And now, Sven, do you mind
Thanks.
just to take this part? Thanks.
I don't. Thanks, Sasha. Yeah, this is a last minute item we flew in because we do get some questions about what's going on with Holesky. Like a really high level overview for those who have completely missed it. There's a Pectra fork coming. That's they try out this Pectra fork on testnets first. So Holesky was up to get forked. It got forked heavily. There was unfortunately a misconfiguration, which is really specific to the Holesky network. It's a misconfiguration of the beacon chain contract. And it caused a bunch of chain splits, and the network had like massive problems finalizing. Now, core devs have been addressing, like from all the clients, have been addressing this issue for I think the past week and a half now. So far, well, they do have like an idea that it's going to see some improvements, but it's not because massive fixes. It's mostly because we're starting to see validators get ejected now. So starting tomorrow, probably we're going to see the first validators get ejected due to inactivity. Now, normally on mainnet, if a validator has less than 16 ETH in their active balance, they get ejected from the protocol. On Holesky, that's at 28 ETH. I think I read that before, but that was not top of mind knowledge for me either, which means that the nodes that have been offline since the fork will start to get ejected tomorrow. And offline nodes getting ejected, that's good for participation, right? So if all the inactive nodes get ejected, then eventually only the active nodes will remain. So theoretically, that's good. but this could take weeks, even months, I think, depending on how many, of course, because there's obviously a queue limit, so you can't keep ejecting. I mean, you can keep ejecting, but the queue is going to get filled up really quickly, and finalization could take a really long time if nothing else happens. So on the next slide, oh, sorry, there's a screenshot where we're currently at. So we're at total votes around 20%, correct head votes around 9%. Now that's nowhere near where we're supposed to be, and it's like depending on the time of day, it's not going up either. So it's kind of stabilizing for the past week, I think. So it's definitely not improving a lot. So there's a lot of issues there. So on the next slide, like what does that mean? Well, first of all, there's a really solid expectation that this is only specific to Holesky, because this configuration is not the way mainnet is configured at all. So this should not be an issue on mainnet at all. But the question is like, what do we do with Holesky? Because this fork that we do on the testnet is not for nothing. It's really because we want to test this on a large scale network. So there's three options that have been named so far. Like the happy path is that Holesky is revived and Lido and Holesky continues, so we can do the tests. All the client devs can, client teams or the node operators can do their tests, but when we do our Holesky test, that would be great. This could take a really long time because waiting on the finalization can take, like I said, weeks or months. There could be a new test made, like a completely new one to replace Holesky, and we just set everything up from scratch and we fork that and test that way, which is a lot of work. And then there's a third option, which we're leaning to, and the Ethereum Foundation, at least EF, is leaning towards this one. It's called a shadow fork, where they take more of like a snapshot of pre-Pectra epoch, the last finalized epoch, and they fork it from there, like a completely new network from that point on, and that becomes a new Holesky. And as we were preparing these slides, we got a plan on the next page. I took like the excerpt from the plan. What's actually going to happen is this shadow fork where, yeah, like I said, it's going to be a fork from a snapshot pre-Pectra, the last finalized one, to go through the transition again, so do the fork again. The entire network will be run by Panda Ops, but the validators that you're running on Holesky, they are actually valid on this shadow fork as well. So you can use the same keys you're running on Holesky and use them on this shadow fork. So that's what will be used to like try out this fork again, and that's what's most likely Lido protocol is going to use to test out the forks. We'll probably be reaching out to a limited number of curated node operators to ask them to run like a small-ish amount of keys. Currently, we're running, I think, 40 or 50,000 keys on Holesky, and we need about half of that. Currently, is what we're thinking. So we'll reach out to 2-3 curated node operators to run those for us. So no action requested for this particular part from CSM or node operators or simple DVT node operators. Although I do think they're still trying to revive Holesky. So if you are running an actual Holesky node operator or node, then definitely stay tuned to the best place is the interops channel on the Ethereum R&D Discord, and you can follow along there and definitely try to get your Holesky node or keep it up and running, because the happy path is still the preferred way. Like I said, this is very new information, so it keeps changing and they're still trying to figure it out. But the best place on the next slide, you can see it, I think, is that particular Ethereum R&D Discord on the interop channel. And I'm sure someone will post a link in the chat. Right, back to our main agenda. We have a cool bit coming up. We have Alon Murdoch from SSV going to be talking about the SSV Lido module. So they've proposed that. And like on a personal note, this is kind of like a full circle moment for me. So way back 3 years ago, as I was preparing for my Lido interview to join in the normal work stream, I got helped. I received some help from Ben Affleck. I don't think he's the actor, but he's a SSV ambassador, who generously helped me review my assessment of DVT tech to submit for this interview. Now, well, I'm working with Lido as a Lido contributor now, so obviously that was a huge help. So now I'm hosting a call with Alon from SSV to discuss our collaboration with Lido. So that's, I don't know, that's pretty incredible to me. So give a warm welcome to Alon, who will be talking about the Lido, the SSV Lido module.
That's pretty awesome, I have to say.
Yeah,
you.
it's cool. He's still quite active, isn't he?
Yeah, definitely. Ben is very active.
And is it? I never asked, but is it the actor or is it just
No,
it's not,
it's just like an internet name.
it
Yeah.
would be too amazing. Yeah. Yeah, that's really cool. So Alan, yeah, welcome. Thanks for joining us, and you can
Thank you for having me.
You can share your screen whenever you're ready.
Yeah, let me know once you see that. Can you guys see my screen?
Yeah, I got it.
So thank you for having me. I'm here to talk about SSVLM or SSV Lido module. This is a big project we've been working on with Lido for quite a while now, and the proposal of which was just last week was uploaded to the Lido community review. And so obviously we encourage everyone to kind of go and read it and see for yourselves. But here I'll try to kind of go over what exactly are we trying to do here and how it's also all connected kind of to the future plans of SSV in general. And so where are we now with kind of the Lido SSV in terms of numbers and working together? So SSV is really primarily participating in what is known as the simple DVT program for Lido. And of course, there are some CSM validators running on SSV as well. All in all, around 2,000 active validators with a couple thousand more in queue and waiting to be deposited. And roughly around 200 operators within the simple DVT/CSM modules. And around, I think, give or take around 14 months, maybe a bit less of mainnet participation. And so those are kind of the numbers today. And so what exactly is SSVLM going to change, really? And so SSVLM is really the first third-party module that anyone is building for Lido. So up until now, the Lido router, the Lido V2 upgrade had three modules. The original module for Lido with the permission set of operators. Then came simple DVT, which was kind of a copy of that and simply a DVT focused module, but very much limited in its capacity. And then, of course, CSM was launched after that. SSVLM is going to be the fourth module, and the first one really to be developed by a completely third party outside of the Lido core team. And I think that's a big step forward. It took us a long time to get here, and a long development time and assessing time and so on. But the main focus of this module is to kind of do a combination of a bunch of different things we've been doing, us with Lido or Lido individually, into a dedicated module for SSV. So the first one is being completely permissions, right? So the permission set module and the simple DVT modules are not permissionless. The CSM module is permissionless. And so SSVLM is going to be the continuation of that, which is continuing to be completely permissionless. Anyone can participate in that module. The difference between it and CSM is going to be that this is going to be a DVT first module. That is, all of the validators ran on SSVLM are going to be DVT clusters. There's not going to be a solo staker there. That's where CSM is focused on. SSVLM is going to be a DVT focused module. And also, by being a DVT first module, it's also going to be the first one with mandatory DKG. That is, all of the validators generated on this module are going to originate as a DKG first validators. DKG stands for distributed key generation. That means that none of the operators within the DVT cluster holds the full key. The key is actually distributed between the cluster members themselves. And that's a big innovation as well. So we're permissionless we already had in CSM, but a DVT focus and a DKG focused module we never had up until this point with Lido. So those are the two main innovation points that we're bringing into this module. The third point is really scale. So we had simple DVT as a DVT focused module. It's obviously it's not permissionless, but it's the DVT module. But it's limited in somewhat because it's very manual. The operators within it were whitelisted and so on. This is the first DVT scalable model in the sense that there is no manual coordination. Everything happens on the fly with zero coordination. And so it makes it much easier to scale it up at a much more significant rate and size than any of the previous modules, just because of the way it operates. And on top of that, it's what we want to kind of our personal goal is to have the best operator APR in the space, both within Lido and outside of Lido. And I think that's really important because one, obviously it's a competitive advantage, but also I think that's a really good way to scale up the number of operators this module will have. And that's really, really important for us. And the way we achieve that, we'll see in a few slides, but that's really, really important. So first permissionless DVT module with DKG mandatory, highly scalable, and with the focus on being with the best operator APR out there. And so that's really what SSV LM is all about. It's taking pieces from other modules, but now putting them all together in this one unique module, which is SSV focused and tries to maximize the amount of operators in a DVT setup. And so that's the module. And I think within maybe 1 or 2 months, we'll be ready for testnet already. But also I wanted to kind of give us a sneak peek of how it looks like in terms of the UI. And so this is a real kind of the real dashboard people will use for SSVLM. We've created a whole web app just for SSVLM where you can actually manage both your bond, your validators, exits, withdrawals, deposits, and all of that. And of course, the actual rewards you're getting. Of course, the bond will be in STETH. And there's a whole full dashboard where you as an operator can onboard, deposit your bond, and wait in queue to be assigned a specific cluster and then a validator. And it's all Lido router compatible. It's an actual module operating. What you see here is also a DevNet data. So it's actually code running behind the scenes. And so this is how it's going to look like. And this whole thing we're building with the hopes of really scaling up what DVT looks like within, and specifically SSV looks like within Lido, potentially kind of in maybe a year or two since launch, we'll have tens of thousands of validators within this module, thousands of new operators, potentially even more of new operators onboarded into Lido, and have this module really scale up and take a significant part, because ultimately we want to focus on pushing DVT within Lido with as many independent permissionless operators as we can. And this is really kind of the scope of where we want to go and kind of the hopes of where this module can land. And so I think that this module is not just a module within Lido. I think it's an evolution, or the next evolution in staking. Staking started in 2020 with the genesis, or staking on Ethereum started with the genesis of the Bitcoin chain in 2020, focused primarily on staking, right? Securing the L1. But as soon as that happened, MEV got introduced into staking. And if you think about it, MEV is just a type of service that validators opt in to do, right? It's not mandatory at all. It's not part of the Ethereum protocol. It's just a type of service that validators opt in to do. A couple of years went by, and then we got introduced to shared security, which at least in its original form was the idea that we want to reutilize Ethereum validators into securing other protocols. And then lastly, we're now seeing kind of the next evolution of staking, which is validator commitments, basically stuff like pre-confirmations and base sequencing, but all of that is built on top of staking, right? So if we're talking about SSV in the context of SSVLM, staking is a big part. And I think this is a significant evolution of that. And that's why also we've been working on a concept called based applications. Based applications are the idea that we can harness or reutilize Ethereum validators into doing more by contributing both functionality and security to other protocols. Based applications are a new type of decentralized applications based on Ethereum and other blockchain validators. And that's really important, again, going back to the SSVLM. Based applications work by utilizing the validation key, or really the identity of the validator on chain. By utilizing that validator, we can extend the functionality and security to other protocols and kind of support a lot of the different use cases that you hear about around, from co-processors, data availability, AI, ZK proofs, fraud proofs, etc., etc. All of those use cases can be powered and secured by based applications, which ultimately are based on Ethereum validators. And if it sounds similar to shared security or risk-taking, you're quite correct, but with a lot of differences. So first off, we're basing our shared security on validators rather than capital. And I think that's a big difference. We want to realize the actual validator as an asset. Next, it's very, very aligned with Ethereum. Those validators are never at stake. With risk-taking, the validators might be at stake. And I think that's a major difference. We want to add positive value into Ethereum rather than take it away. It's extremely scalable in the sense that it can support many applications because of the nature of how it works, and it's extremely affordable. Risk-taking is super expensive. It's based on capital. Here we're using or reutilizing a different asset, which is the validator itself. And so there are major differences in terms of scale, the type of validators we can use, and cost, which we believe is going to be the future of shared security. And not only that, I think this is also the future of staking. Up until this point, staking is really focused on the base rewards and transaction fees. Potentially, we'll see pre-confirmations and base sequencing coming into play and adding value to staking or validators on Ethereum. But I believe that long term, we'll see that a lot of the value for staking or validator staking is with based applications. And more specifically, and this is kind of how it ties back to SSVLM, I think this is the future of decentralized Ethereum. If you think about it, if we can add value to Ethereum validators running and securing other protocols, imagine the possibilities of operators that, with a very small amount of collateral can operate a validator in the behalf of the Lido protocol, but also use that validator in a non-slashable way, without any risk, to tap and kind of secure other protocols and earn extra rewards by doing so. We can bump up significantly the amount of rewards that individual validators get. And so again, imagine from the operator point of view, just with a very small amount of bond can run a validator on behalf of Lido, utilize the validator for securing other protocols and with based applications, get additional rewards, significant rewards back, and with that run additional validators. All of a sudden, we can have a lot of solo stakers not only earning some extra rewards, but actually making a significant amount of extra rewards, running more validators, and that way decentralizing further both Lido and Ethereum. And I truly think this is the future of staking as we see it. The idea that we have this asset called the validator, and we can do much more with it than just staking on Ethereum. I think that's a really, really interesting future for Ethereum and for decentralization on Ethereum. And this is kind of the future of where SSV is going, and with it, SSVLM. In terms of timelines, we're expecting the testnets, public testnets happening in March, within March or early April, and then mainnet April or early May. And so that kind of coincides with timelines where want to see SSVLM going through with testnets and mainnets as well. And so, yeah, this is kind of the future of both SSV with Lido, but also SSVLM independently going into this based applications future. And I think this will fuel up a lot of operators wanting to tap into based applications, earn those extra rewards without any risk extra risk to their validators, and have this economy built on top of it. And ultimately what we're trying to do is decentralization, right? So this, if we can make decentralization economical, I think that's the right way to go. Thank you, everyone.
Thanks, Alan. That was an abrupt stop. I didn't expect you to. I had some questions. So there's like, this is the third module. There could be more coming. Like, this is a third-party module, but could you compare for example, the CSM module to show like some benefits of participating in the SSV with other nodes in a cluster, as opposed to joining the CSM module?
So I don't want to get into too much details because we'll publish that as we go along, but we definitely expect it's going to be significantly cheaper in terms of bond to get into an SSV cluster on SSVLM. And also, this is an SSV specific or DVT specific module. So it kind of tries to combine simple DVT with CSM. And so in terms of the economics, one of the goals we have is to be to have the best APR available for anyone who wants to be an operator for another protocol, or an operator running validators for a protocol. I won't get into the details of that, but that's probably the thing that we put most thought into. And so, yeah, bond will be lower, obviously, because it's a cluster, so it's divided between the cluster members, and also the individual members within the cluster. We want to have the best APR, and that's even before based applications. So based applications should be even on top of that.
Yeah, that was another question I had. Like, how does that tie in to the SSVLM module specifically? How do these based applications
So,
tie in?
ultimately, when you can run, ultimately based applications are based on validator entities, right? So, if you have a validator running on Ethereum, you can tap into and secure other protocols within the based applications layer. The cool thing about CSM and SSVLM is that with a very small amount of bond, you can actually run a validator in the behalf of another protocol, in this case, Lido. And so by doing so, you can also tap into based applications. Otherwise, you don't have maybe enough ETH to do that, because you need a full validator, which is going to be at least 32 ETH. But with CSM and SSVLM, you can, with a very small amount of bond, actually get a validator to run for for Lido. And so with that validator, you can actually tap into based applications. And again, based applications are utilizing the validator in a non-slashable way. And so that's kind of how the connection works and how the economics work.
That's cool. So you mentioned the timeline, testnet in March, depending on the testnet, I guess. But what can, like, if there's node operators listening now, I'm sure there's CSM node operators listening who are interested. How can they get involved? I've seen the verified operator program mentioned, but what can people running a node now interested in this do now at this point?
You can reach us on Twitter. You can reach us on our Discord, and kind of get ahead of the line in terms of testnet and devnet. And from there, kind of discover the opportunities, work with the different based application developers coming in.
That's great. I'm looking through the chat if there's any questions. I see Will saying that SSVLM is an amazing addition for accessible node operators onboarding, which is not surprising coming from Will, because I think his full-time job is getting people onboarded on different types of simple DVT modules, clusters. So if anything, that's a great accomplishment to make that part permissionless and not managed by Will. So he's going to have to find a different job, but he's very thrilled about it, I think. Yeah, I want to thank you again, Alan.
Thank you so much.
Coming up next, we have an OAD, actually. Impact staking, which is a really cool way to do something else with your staked Ether rewards other than just lose it in your next DeFi project. So Jaydeep, if you're ready, you can take it away, please.
Thank you very much. I'm Jaydeep, and we've been building Lido impact staking. And I suppose we'll start with the Lido bit, in that Lido is one of the most successful crypto D applications in the world. And the idea of taking that and purposing it to fund real world impact is what Lido impact staking is about. We've got the graveyard shift, and so therefore I don't want to do slides. We'll just talk about the app that's live, and the different use cases. It's really simple. You use your staking returns and you donate a proportion of that, whatever you're comfortable with, between 1 and 100%, to fund real world social impact. And the idea in impact staking and Lido impact staking has sort of two trunk parts. The first part is the idea of a donor becoming an impact staker. So they're not giving away their money anymore. They're keeping it. They're staking it with Lido impact staking, and they're donating the opportunity cost or a percentage of it in their staking rewards to a social impact cause. And what this means is that as a donor, you're always hit up for more money. And this stops that cycle, because you're keeping your money and you're donating the stake return. On the impact project side, we are working with partners, and you're going to hear from Give directly, who actually use staking rewards through Lido impact staking to fund their work. They have to have programs that can capture a unit of impact and connect it to the staking return. It's not about building a bridge with impact staking returns is a bad idea. Supporting direct cash transfers, connecting schools, and planting trees to sequester carbon is a good idea, because the impact data is really, really tangible. You can register any social impact project on Lido impact staking, but we commit and ask that projects demonstrate with the model we've built with UNICEF how they're going to use those staking returns. Bearing in mind, ETH is a volatile asset. It goes up and down. That means your returns are going to go up and down. So how are you going to model and work that impact? And I think the other bit I want to talk about before handing over to Ilian and his very real world use case, apologies if you can hear my kids in the background, is the idea that anyone can work with Lido impact staking, in terms of if they want to fund their social impact this way, then it's all they have to do is register. But we've tried to incorporate the values of Lido in that, which is absolute transparency on how that money is going to go. Launch nodes don't take custody of anything. The smart contract address means that if an impact staker wants to support you, then that money goes directly to that social impact project and their wallet address, and they have that to spend. If Holesky wasn't on fire, I would demonstrate the app, but it's very, very simple. The take banana to the world is again part of this different TVL that we're looking to get, and I'll talk about the non-banana world first. We think that corporate CSR and philanthropic capital, which there's lots and lots of, is really interested in a real world crypto use case. We're not funding public goods. Well, I mean, it's permissionless, so we might, but the real focus is on real world and real people, and taking the engine of Lido, which is world class, and also has the very best intentions at heart, both in terms of decentralizing Ethereum and finding use cases like this, and purposing it. And so that TVL is something we're working with. We also realize there are people who have smaller amounts of capital and would like to support the initiative, and incentives are the watchword of our industry. And so as we're doing real world impact, we thought we'd give you a real piece of duct tape and a real banana, and you can stick it on your wall and take a photo and share it. And that's our incentive. You don't have to do that, but if you do, you can claim after impact staking and provide an address that you want us to send the banana and the duct tape to, and we'll do it. I'm not going to say anymore. I'm actually going to focus on the use case of this, which is Alon and Give Directly. Before I do that, I wanted to just say that we have created a front door, which I will share now, that means the projects working with us don't need to focus on the technology. Like Lido's done that. And we present them a branded page whereby, just like they'd take PayPal payments, they can now start saying to their donor base and their community, we receive staking returns. And the safety of that is because it's done by the best operators in the world. Without further ado, I will hand over to Alon from Give Directly to explain how he uses ETH staking returns to fund his work and what his work is.
Amazing. Thanks, Jaydeep. And good to meet you all. So my name is Alon. I'm part of the Give Directly team. And for those of you who don't know, similar to a lot of what you're talking about, we like to keep it simple as well. We basically take cash from donors and we give it to people in extreme poverty. And so when we're talking about extreme poverty, it's typically people living on what the World Bank's definition of $2.15 or less a day. So talking about a pretty inhumane deprivation of basic human needs, safe food with typically 1 meal a day, or safe drinking water, typically 1 mile or miles away from where you're living. And so originally the concept of impact staking was super appealing to our team. We were trying to innovate on the aid sector that was sort of slower to innovate than other industries, and something that, you know, was focusing on transparent solutions to figure out better ways to get money from people with a lot of money to people with very little money was super appealing to us. And so when we heard about a group pushing for sort of like decentralized and transparent platform to do so, we thought it would be a great match. So just a little bit of background more on Give Directly. We're basically solving for this problem of, you know, still 690 million people living on less than $2.15 a day. And that number of people continues to rise in sub-Saharan Africa. And we think throughout the time of the aid sector, we'd sort of overcomplicated how we give, you know, a donor giving to an international HQ NGO that then gives to a local NGO, and one more local NGO, and then to recipients. And sort of our model is as direct as it gets. Is we have a donor, we give that cash to recipients, and we sort of trust them and give them the autonomy and dignity to choose for themselves. And so cash is among the most studied aid interventions in history. So we've seen through our programs, we've run 20 randomized control studies, which is sort of the gold standard in research within the NGO space, and have seen increased consumption, investments in assets, both in the short term and long term. In a program where we sent about 17% of local GDP, we saw negligible inflation and a 2.5x fiscal multiplier in the local economy in Siaya County, Kenya. We've compared it to other interventions where it's outperformed job training, nutrition program, and aspirations workshop. And we've seen a lot of it also just drive expansion of existing businesses. When you give someone, you know, 2 to 3 years salary all at once, they have, you know, the capital to actually invest in themselves and not just wait for a smaller amount of money to come through the door. And so to make it like a bit more real, you'll have, you know, 2 examples of recipients with completely different stories of Bertha, who's from Malawi, has a child with, you know, a severe disability, needs to get to the hospital. And these are people that can't afford the hospital bill, let alone getting to the hospital, versus someone who needs a safe roof because water's leaking through their roof and their kids are getting sick. And so I think for decades, experts around the world have been trying to figure out what's the best way to help people. But the truth is people in extreme poverty are pretty good at knowing what they need. And we think cash sort of enables that choice. How we work is also pretty simple. I'll try to break it down in 4 steps. We essentially first target individuals, and that looks like a couple different things. We typically use government census data to do so, and as well as telecom database. So we're giving people money through mobile phones, and so they'll get a notification on their cell phone. If they don't have a phone, we'll get them a phone, and it comes out of a portion of their transfers, but these are very standard cheap phones. And the majority of our staff live in the areas we work in. And so we'll go village by village enrolling staff, with staff enrolling recipients, and we host community meetings to let people know about cash transfers coming in. These are called barazas or huriros. And again, this isn't to tell them how to spend their money. The concept of give directly is unconditional, no strings attached cash. And so we'll then deliver those funds to recipients through mobile phones. And in some cases, we're giving people their first ever national ID so they can get a bank account, and they will typically cash that out at a local money agent. Lastly, as I mentioned, with the research that we're doing, we'll make sure to monitor how things are going. We provide a hotline and digital follow-up surveys for people. But again, this isn't to influence what the money is being spent on, but it's more to provide an opportunity for people to report on any issues or see any trends in different spaces that we're working in. And so this opportunity was, I mean, it seemed a little too good to be true. And when we came in 2020, we became involved in the blockchain kind of organically. Individuals started sending a lot of cryptocurrency 2020, 2021. And it made up a pretty big portion of our donations from individuals. And I think a lot of the things that aligned in that space were the sort of decentralization of our work in general and giving people individual agency. It was also sort of a market-based approach. And it also overlapped with a lot of our community that was already donating because maybe they were in the effective altruist community or wanted to see efficient ways to get aid over to the people who need it most. And so this has been a really exciting experience for us, and I'm happy to answer any questions on our work specifically. We've operated in about 15 countries now since we've started, and are set to deliver our billionth dollar this year. And so I'm very excited for this, and I think, you know, both selfishly from my donors who I know are going to be really excited about another innovative solution to get cash to people. It sort of seems like it's a natural fit for a lot of people that have already asked questions about different ways they can be using the wealth they've created within Ethereum or within just this general ecosystem to actually get cash more efficiently to people in like different innovative ways. So just want to thank you for having me here, and happy to answer any questions that could be useful.
Yeah, thanks, Alon. That was really great. You as well, Jaydeep. The first question I have to ask everyone is wondering, like, how do you transfer the cash? Like, what do you use? What system do you use for that?
Yeah, so we'll use mobile money when we transfer cash. So when people are giving us cash, and let's say they're giving within crypto, if they're giving within crypto to one of our many crypto wallets currently, what we're doing is we are, you know, converting that money immediately and then sending it over as cash. And then people sending it over as through mobile money, and then people with their phones will cash out at local money agents that are around villages. And so they're typically within pretty quick walking distances. And the rise of mobile money throughout East Africa was like one of the many lucky things that came at the time that Give Directly was starting up. And the amount of people that already do have phones within the places that we're working makes it much easier for us to just transfer this money over via phone.
And this is like mobile money is stuff like M-Pesa.
Exactly, that's
like
right. Where it really took off in Kenya at the beginning of Give Directly's work.
Yeah, that makes a lot of sense. I was actually in a previous life involved in microloans in India and Indian they're called slums, but
yeah,
they're not slums actually. But the problem with microloans is that like they're very administratively there's a lot of work in it. There's a lot of labor involved in getting these microtransactions done, and like this was pre mobile money as well, definitely pre blockchain. So that's really interesting. So what other income sources? Well, not sources, but like where are you finding your donors generally? Because you've been at it quite a while already.
Yeah, it's a good question. And I think it's evolved quite a bit over time. I think the concept of cash, I think especially during COVID in the US, when people were getting, you know, transfers sent to them, I think helped a lot with getting our messaging out there. But I think when we started, it was a lot of people within the effective altruist community that were sort of into this idea of like really efficient ways to flip the sector on its head, that was sort of tech first, using mobile money to do so. But I think it's grown to a broader audience as well over time. I think just the concept of giving cash and people seeing it happen in their own backyards and then saying, oh, wow, this dollar would go a lot further in rural Malawi. Maybe I can send it there as well. But I'd say it's a combo of, institutional partners and corporations that are also giving. And then a pretty big chunk of our donors are within the general like tech ecosystem, not just within, the blockchain and crypto space, also within just the tech industry. We also have a lot of folks within the hedge fund and finance like umbrellas as well that do care a lot about, cost per dollar of where they're donating and how that's actually being allocated. And so I think our low administrative cost was a big appeal to those people as well. We also have people who just really love the concept of, letting people in poverty choose best what they want to do with their money. And so I think that sort of scales across a pretty broad range of people as well. Yeah.
Yeah,
Ilan,
it makes total sense to me. Like this was, I think, when I was a kid, this was the naive way of thinking. When we raised money for people in poverty, like in the 80s, you had these for Africa. Like we talked about Michael Jackson before this call. He would do what's it called? Anyway, he would sing for Africa, and I thought they would just send the money there, but apparently that's not how they did it. But like this naive way of doing it it makes total sense to me, because if you have just barely any money and someone gives you $10, you're going to stretch that to wherever you can, like much better than someone from another part of the world can imagine you should be spending it on. It's definitely interesting. Jaydeep, if I can switch back to you, but you mentioned anyone can register. So anyone who's like Give Directly can sign up for the platform. Like, how does that work in transparency terms? If anyone can sign up and people are natively skeptical in crypto world, so they want to verify, not trust. How does that work if anyone can join?
So the application process and when you apply, that's made public. In addition to that, we ask questions about who's verifying your impact data. So when you're in effectively a marketplace of organizations that are looking to support you, and the idea of this front page and this kind of dedicated page comes to an organization that's gone through that, and that data is available and it's verifiable. I think that the idea that Give Directly has disrupted and changed international development and the concepts in it, we hope that there are going to be new projects, and we're really, really excited about grassroots economics and the idea of community pooling, which is something that will be on Liz shortly. And I think that the idea that if the organization that's listed isn't compelling in what they're saying they're going to do with the staking return, well, then us as stakers won't donate. I mean, I think, Ilan, of every dollar that gets sent to you, 89 cents goes as direct cash transfers to the target audience. That's compelling, and we're visualizing that impact data in terms of direct cash transfers and also the tree planting that we're doing. So when you donate X amount, this is how much carbon sequestration has come to it. And whilst we haven't finalized it, and I think carbon markets are still not as liquid as we'd like, if in the event that model allows us to get a verified carbon credit that can be traded in a liquid context, then we would obviously offer that back to those who have impact staked. And the incentive wouldn't simply be a banana with some duct tape.
Yeah, that's a great bridge to the banana, because I was a bit skeptical that you're going to be sending bananas and duct tape all over the world to people and to draw them to impact staking projects. But it's just one of the routes, obviously. I don't think people are going to go to launch nodes and see where they can give their money, because Give Directly is like doing this 24/7, trying to reach people and trying to connect to people who want to donate. And you're basically giving them another alley, another option to donate. It's just one of the many options that I assume you have. This option gives an APR. It gives interest. It seems completely different than the other options, I assume, just sending money. How does that work? Can you just offer APR? Are you going to get difficult questions from a legal point of view, financial products you're now that you now have on your front page as well? How does that work?
Well, I'll try and answer that before handing over to Ilan. And I would say that it's really hard to give money away, what we've learned in terms of connecting to exciting projects and organizations, especially when they are, albeit as disruptive and great as Give Directly is, they do have a legal process, they do have things. And so our mechanism has worked in two different ways. One is that the smart contracts and the lack of an intermediary means that a donor is connecting directly to Give Directly through the Lido Impact Staking application and sending money directly to their wallet. It's not going to launch nodes or to Lido Impact Staking or anyone else. And then the second bit is that there is no real APR that that is being offered by Give Directly. It's being done by Lido Impact Staking, and this is a mechanism to donate. And you can, as I said, donate 1% or 100%. The idea that Give Directly is offering a financial product isn't true, because it's very clear who's doing the staking, and that this is a not-for-profit initiative. So I think we haven't had that issue in terms, and we're working with a number of multilaterals right now, and family offices. That hasn't come up yet. And from a regulatory perspective, because you're donating a staking return, actually the amount in every single donation, which is catalogued, and there's a tax reporting tool. So if you become an impact staker and you're doing it in a way that means it's of usefulness for you to get a tax rebate on what you've donated, you can do that, and that report generates within your dashboard. So we haven't, I think the answer is it hasn't been positioned to us that we're suggesting that Give Directly are offering a financial services product, because of the fact that we're kind of positioning it as being part of Lido.
Yeah, no, that makes sense. I mean, if you look at the page, you can see you're staking your ETH that you already have. I think you're not going so far as to offer a US dollar onboarding ramp to people to buy ETH and stake it right there, because that will be a whole world of mess right there. But this is really cool. I think it's amazing that like, it's often so abstract what we're all doing in Ethereum. Like DeFi is one of the most practical applications we have, and even that is just, I mean, what are we even doing? Sometimes it's weird, and it's I think it's great when it touches the real world, touches real problems, and touches actual people. In a global sense, it's on the other side of the world. At least for me, it depends on where you live, of course, but that's the way global works. I think this is great. This is one example. You've got 2 more examples on your site, so I encourage people to look at that. Are there any other ones you want to touch on, or are there more in the pipeline coming up? Jaydeep?
Yeah, we have a virtual forest whereby you can donate a percentage of your staking returns. And that those, whatever you donate will be used to plant trees, and you can see the carbon sequestration of that. And we're working with a couple of multilaterals right now, which are part of the UN framework to support them. And again, their work and the projects they'll be listing are very much about that idea of a staking reward, and there's a modular unit of impact rather than generically sort of giving. And I think that's really important. And we've been working for 4 years in a solo staking capacity to donate ETH staking returns to fund internet connectivity in schools. And that's a widely covered project with UNICEF and EF.
That's great. I'm afraid we're out of time, Jaydeep, but I want to thank you and Alon as well for this presentation. Really cool. Launch nodes, also one of our curated node operators. Very happy to have them. Very happy with this presentation. And I think I have to wrap it up from here. I want to thank all our viewers and listeners for joining in. I want to thank everyone for the questions. And I can only say, I hope I see you next month, first week of April, on the 27th edition of the Node Operator Community Call. Thanks, everyone. Bye.